Hello, it's Adil bringing you a intermarket analysis perspective on the US markets going into Monday's trading, the 2nd of March 2015. Okay, folks, interesting close on Friday. Obviously, a negative close. Several factors for that. If you look at my FTSE 100 analysis video, I go through the fundamentals there. For those of you that want to get an in-depth version, just basically summary. With regards to weakness on Friday, really it stemmed from Asia to a large part, and also it stemmed from Greece as well. Okay, so overnight the Hang Seng was down, the Shanghai more or less flat, okay, and the Nikkei was more or less flat as well. So i.e. there was no continuation basically, and so the lack of continuation and thrust in Asia obviously is one factor. Then you had European markets. Obviously, the FTSE itself was flat, stroke negative. Okay, the European markets excelled and excelled pretty dramatically, as you can see the CAC, Euro stocks, and obviously the Deutsche Börse, the DAX excelling 11 up to 11,400 and beyond. The Swiss market was negative, which again is a negative factor. IBEX obviously follows its counterparts and buddies. Everything's about the euro there. Okay, given the fact that the euro sold off quite drastically, and as you can see here, Athens market was down. So the reason why the Athens market was down was due to the news regarding a potential. Well, first of all, it started off with negative comments from Mr. Varoufakis because he stated that he was intentionally vague when attempting to negotiate a bailout extension, because that was the only way that the Europeans would fall for it. Okay, so in other words, he was claiming that you duped the Europeans, and the Germans obviously were pissed off due to that. Now there was also news breaking out that the deficit in Greece is much larger than expected, so therefore they require a 30 billion euro bailout as opposed to a 10, 15 or 20 billion euro bailout. So again, that's negative news. And certain, obviously, the German politicians that revolted against the vote, and there certainly seems to be a growing tension with regards to the Bild newspaper in Germany, which printed 9 across the front page, i.e. the Germans are not interested in bailing out the Greeks because they're a bunch of liars. Okay, and obviously Mr. Varoufakis' comments really obviously confirm that, and growing discontent and disbelief with regards to Greece. And I think eventually it will lead to the cancer being cut, i.e. a Grexit. Okay, obviously at present they're in a 4-month probationary period, so we'll see. Okay, I don't really think that's going to last, even though they can talk as much as they want. The Greeks are not willing to bow, even though they've given a lot of concessions already. They said that they were not even going to negotiate in terms of the bailout, and they wanted it cancelled and they wanted a new program, and that's not exactly what they got. So they have concerns back home. So a lot of it is noise to a large extent, but you can't attribute noise to a 30 billion euro deficit. That's not noise, that's fact. Okay, and that's one of the reasons why obviously you can see the euro collapsed, and the Athens stock market was down. So that's a negative as well. So Asian flat, Hang Seng negative, Nikkei flat, Shanghai flat, and obviously Hang Seng negative is a negative overall because there's no continuation and a lack of movement higher or thrust higher. Commodities obviously under pressure as well. Add in the fact that you had a weak GDP print in America, which obviously wasn't as according to expectations, because a lot of individuals are expecting 2.6%, potentially higher. And given the fact that you had a lot of hawkish comments coming out of the well, but they're not exactly voting members, but still they reflect the thought process of central bankers, and they were very hawkish. If you go back and look at LiveSquawk or Forex Live or RandSquawk or Forex.com or Daily FX Twitter feeds, you'll see that they were talking about the balance sheet and obviously offloading the amount of debt that they have on this balance sheet. And let's talk about the Fed being audited. All these news flow, or all this news that's obviously out there is obviously negative for the equity market. Any talk of the Fed being audited, any talk about the balance sheet obviously being much larger than expected and toxic and so on and so forth, then again that certainly puts question, or certainly casts doubt on the ability and the credibility of the Fed. and obviously brings into account higher interest rates as well. Okay, especially given the fact that real wages are starting to pick up. So this is very, very interesting. Okay, so all these factors are together, obviously with a weaker GDP print, uncertainty regarding Greece, and there were one or two other variables as well, I can't recollect now, but basically it was a negative bias. Okay, and that's why we obviously finished the week. Obviously the MySex was down as well. The situation certainly is spiraling out of control now with regards to this opposition leader that's been gunned down. Whether who knows who, I have no idea who it is, but this war via proxy, which between the US and obviously Russia at the moment, isn't exactly good news, especially with regards to the situation in Ukraine deteriorating as well. So that certainly isn't good. Okay. Now, if you look at the US markets, the S&P 500 finished down 6.24 points. The Dow itself finished down 80 points, and the Nasdaq finished down 20. Okay, so this is all negative close in on a Friday, which is generally a light volume float up manipulation by the Fed and Yellen's algos. If that generally tends to occur, then it's usually an early warning sign. Okay, so they are the fundamentals. Okay, hawkish Fed. Not officials but unofficials, because a lot of them don't vote on the board, but regardless, like I said, it's all about prepping the market psychologically for this rate rise, which is obviously negative, and this can be seen on emerging markets. Now if I bring up the index, which I've already shown on the FTSE video, you can see that you've got a topping tail on the emerging market EEM fund. Okay, so again, any talk of rates, a potential raise in the interest rate in America obviously will hit the emerging market first, and obviously that's negative, but because the costs of capital rise, and obviously that hurts profitability and investment and so on and so forth. Okay, and consumption. So that's not exactly a good sign, especially adding the fact that the GDP in America wasn't as high as everybody expected, which generally means that the patient who's come off the life support machine, i.e. come off the Kool-Aid, which is QE, isn't strong enough to sustain himself, and that certainly casts everything into doubt. Okay, right, let's start by looking at the technicals now that you know the fundamentals. Okay, so let's start by looking at the S&P 500, which usually is the most popular gauge, and let's try and decipher exactly as to where this market is going. Okay, right, technicals. S&P 500, where art thou? Okay, here we go. Okay, that's a 60-minute chart. I'll come on to that in a second. Okay, so weekly chart, we always get the bird's eye view, as we all know. Weekly chart is a doji, indicating signaling exhaustion. Okay, folks, so again, certainly take that into consideration, given the fact that you've got the backdrop of a potential raise in rates, etc., etc., and hawkish commentary as well. Okay, and given the fact that GDP wasn't stronger than expected either, so you can't fall back on stronger growth either, so it certainly is a concern. Okay, so your support level, if you do pull back, you're looking at 2095. Previous resistance equals support. Obviously, if that gives way, then you're looking at 2065 on the way down. For now, obviously, innocent until proven guilty. Higher highs, higher lows. Provided we hold 2095 on the S&P, obviously the bulls certainly are in control. 60-minute chart. Okay, let's have a look. As you know, this is H&S formation that I sent out well in advance. I mean, I was sending this out on the 26th, probably even the day before, and warning people about a potential H&S scenario, given the fact that you had this uptick in volume here, you have an uptick in volume here, and then this sell-off has good volume too. Okay, so this is all good for H&S formation. Now, what's happened over the weekend? We've had Chinese data. That's obviously missed expectations, and we've had this surprise Chinese rate cut, which again is causing more concerns than it is positive in terms of obviously a lower cost of capital. So why did the Chinese cut the rate on a Saturday, and then obviously the negative data deluge on Sunday? It certainly is a cause for concern. Now, was that rate cut done because it wanted to stimulate growth, or was that rate cut more to do with fighting off deflation? If it's a deflationary rate cut, then that's negative. There's nothing positive from an economics point of view. I'm not sure how that can be interpreted as being positive. Because the sole reason of doing so is to fight off deflation. Deflation, as we all know, is negative for an economy and doesn't help growth whatsoever. So from my perspective, that rate cut, which was a surprise, should signal panic and discomfort and negative growth going forward, which obviously the PMI data on Sunday confirmed. Okay, so from my perspective, that is net negative. Okay, net negative. And also given the fact that you've got geopolitics in Russia now, so that situation certainly isn't good. Okay. Righty then, so 60-minute charts, H&S formation, as you all know. I've been warning everybody on my Twitter feed. Those of you that are not on Twitter, certainly follow me. Trader at Adil trader at trader_Adil, sorry. So certainly follow me, and as you know, I always post charts in real time, give you setups, give you support and resistance levels, and always try to give you a heads up with regards to any potential technical formations, and obviously from a fundamental perspective I give my insight too. Okay, right, 60-minute chart, H&S formation, as you all know. Target on the H&S is 2120, neckline is 2105. You're looking for a 15-point drop, which takes you down to the 2090 level, which, as you already know, there's support in this region. So 2090 to 2085, watch out for support in that zone. Okay, 10-minute chart, let's have a look what's happening here. Okay, so 10-minute chart, let me just update this now. I mean, a lot of these trend lines have become obsolete now, so let me just get rid of these. Okay, here we go. So obviously we were holding this potential key support level, which has failed. Excuse me. Okay, next support level is going to be, well, the one that we're observing at the moment is 2103. If that gives away, then you got previous resistance equals support, which is around the 2101. If that gives away, then you have the next level of support at 2092, and the next level of support at 2086. So follow your support and resistance, folks, okay? It's all about support and resistance when it comes to technical analysis. Okay, so this is basically where we are. Okay, support and resistance. Now, given the fact that that's broken, I'll get rid of that for now. Okay, and like I said, watch out for these levels here. The next level being 2892, 2085. Now, that's something that I certainly expect to be hit this week. That's going to be very interesting going forward. Okay, so watch out for that 10-minute chart. Now, let's corroborate this with obviously our Russell. Okay, so Russell 2000, that's a very important index. Now let's just bring that up for you. So Russell 2000 certainly is propelling higher. We have a rising contracting wedge pattern. So again, this is the same pattern that's on the FTSE 100, same pattern that's on the FTSE 100, and it's signifying or indicating to me a negative move lower. Okay, a rising contracting wedge is an exhaustive pattern for a bullish market. Okay, same concept that we're looking at with regards to that's the IWM, looking at the IWN, okay, which is a small cap for Russell. So you're looking at the IWN, and you can clearly see here that this is also holding, and it is into resistance and is maintaining that resistance zone. Okay, so very important that is maintaining that resistance zone. Very, very important. Okay, bear with me. Okay, interesting scenario. Okay, so small cap, large caps both are into resistance on the Russell, and that's obviously confirming the H&S weakness on the actual S&P 500. Now there is another indices that I follow. It's called the Wilshire. Okay, and the Wilshire is a very important index because it covers more or less a lot of the 5,000 stocks. Okay, and again that's the same type of pattern. Daily chart, as you can see, indicating exhaustion. Next level is the 21,600 level, and the 60-minute chart has the H&S formation already in play. Okay, as I pointed and indicated earlier. So very important for you to look at that pattern as well. Okay. Now let's have a look at the Dow, and let's see exactly what's happening here. So one of the indices that I must highlight is the Dow Transportation Average. It's holding resistance. It hasn't broken out. So given the fact that it hasn't broken out and hasn't made a new high, generally will give you the signal that the move on the Dow average is actually a fake out and not a true breakout. Okay, so if the Dow breaks this 18,100 level, then expect a fast capitulation down. Okay, a very, very fast capitulation down, and you're looking at potential support around the 17,950 level. If that obviously breaks, then you're looking at 17,850. So certainly a quick and fast capitulation downwards. Okay, so that's indicating a potential a negative or a false breakout. Okay, now let's have a look at the Nasdaq now. With regards to Nasdaq, okay, we have this rising, obviously a bullish channel. The potential here with a bearish engulfing candle now for it to break lower. If you look at the 60-minute chart on the Nasdaq, you can see that we've put in a double top scenario here. and we are looking at potentially, if we break this 44.30 level, then you are looking at a quick move lower, and the next potential support zone is going to be around this region here. Okay, so very important with regards to the Nasdaq. Looking at a 60-minute chart on the Nasdaq, you can clearly see that there's a double top scenario. Go to a 10-minute chart now. Okay, a 10-minute chart, you can clearly see that there's that resistance that's been established at 4460, very hard to breach and break through, and we are certainly into this rising, we can call this an ascending triangle in a sense. Basically it's and it's looking to potentially break lower, and it has obviously broken lower as well. Okay, so again, support on the Nasdaq is at 44.30, which is going to be key. If 44.30 breaks, then obviously we're going to bearish territory, and then we'll look at the next potential support zones. Okay, so previous resistance equals support and horizontal support there. Okay, now let's corroborate that and do some cross-market analysis on the semiconductors, or should I say the biotechs. The biotechs, as you can see, this diagonal trend line is certainly holding as resistance. You have a potential topping tail there, exhaustion, and looking at a potential reversal. A 60-minute chart clearly defines that too. As you can see, you have a triple top resistance here, obviously indicating exhaustion. Bulls certainly running out of firepower here, and looking at a potential reversal on the cards with regards to the market there. Okay, so again, we will watch that very carefully as to what the next move will be. From my perspective, certainly into resistance. Now let's have a look at the actual semiconductors. That's a very important index that I tend to observe to confirm the bias in the markets. Daily chart certainly is bullish, given the fact that it's consolidating above the previous high. So certainly have to give it, take the hats off with regards to the bullish bias there. But the 60-minute chart certainly paints a different picture. As you can see here, potential double top scenario. The higher highs are no longer there. We failed to make a higher high. Whenever a market fails to make a higher high, it generally moves in the opposite direction. And as you can see here, we have this rising, contracting wedge pattern scenario again, and ascending triangle again, and looking for a potential break lower. So therefore, bias remains bearish, okay, on the smaller time frames with regards to the semiconductors. So the Dow, the S&P, the Nasdaq, the Wilshire, all indicating a potential risk-off type scenario, and it all basically boils down to the S&P 500, and it's all about this H&S formation. Provided we remain below the neckline, which is at 2106, and the market continues to move lower, then you are looking at risk off for all global markets. Okay, folks, so risk on, risk off, wax on, wax off. Goodbye now.